All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. Let's just get this thing started. And we have a lot of things to talk about here today. So if you're new, welcome. Let me quickly explain to you how this works. So first thing I'm going to do is run through the economic calendar. We should do that every week to get an idea of what kind of events may be ahead so that we can manage risk more effectively. Then we're going to talk about this Bitcoin chart that you could see on the screen here. I also wrote my article on TradingView yesterday, so you'll have some idea of what I'm going to talk about today if you have read the article. So we're going to go over that. Then I'm going to bring out the TradeScanner Pro, and we're going to see what kind of day trade signals we can find today on Bitcoin and what we can learn from them when we want to apply these lessons to when you're using the TradeScanner Pro. Okay, so it's sort of like a tutorial there as well. So if you have any questions as I go through the stream, feel free to place them in the channel here. I am streaming on Rumble and on Twitter. So if you're watching me from one of those platforms, make sure to come over to YouTube if you'd like to ask a question. All right, so with all that, let's get started real quick here. Let me just put up this slide. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. And a quick hello. We got Stian. Hey, Stian. We got Howard. All right. Ken, good to see you. Kai Savvy from Brooklyn. So if you want to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. And one thing that I'm going to try to do very hard, I'm working on this right now as we speak, is I'm going to try not to say and okay, because I watched my previous video and I said and okay way too many times. And in fact, I feel like saying them right now, but I'm going to try very hard not to say those two words. Okay, so let's see how well I can do. Now, before we get into the economic calendar, I just want to say a couple of things. First, I just said First, we have, now I'm going to mess myself up. First, I have an announcement I want to mention. Stian has sent me the update to the TradeScanner Pro. So I haven't pushed it yet, but in the new update, we have the ability to change the speed of the trailing stop. So I haven't pushed it out yet, but I will be pushing it out probably by tomorrow. And you will have access to people that are subscribers will then be able to update your script, and you will be able to change the speed of the trailing stop. Now, a function like this or a feature like this is best for more advanced traders because perhaps you want to be more aggressive, so you want to give the market some room to breathe. You can use a slower trailing stop. But if you want to be more conservative and you have like a really strong runner and you want to retain most of the profit, you can use a really tight trailing stop. So you will have that access in the new version, and I'll demonstrate it as well. But I just wanted to mention I'm pushing that this week. Now, make sure that you go to the TradeScanner on my profile. If you go to the TradeScanner link there, you'll see a boost button. Make sure to press the boost button so that you get a notification when I push the update. Otherwise, you won't know when I push the update. And when I push the update, all you have to do is remove it from your chart and then put it back on your chart, the script, and then you will have the updated version. So I wanted to mention that. Second, I wanted to mention too that we're now working on our first overlay. What that is basically an extension of the TradeScanner Pro. So we have some time before that's going to be out, but it's going to be a separate script. And what this overlay will feature is a support and resistance module. So you'll be able to turn on support and resistance levels on time frames above the one you are watching. So for example, if you're on a 15-minute chart, you'll be able to turn on support and resistance on a 30-minute or 1 hour or whatever, okay? And you'll be able to see these levels on your chart. Also, we're talking about a filter where if you turn the filter on, it'll only show signals that occur at those levels. So that will increase the probability of the signal that you take, but it's going to reduce the frequency of the trades. So if you're someone who likes lots of trades, then that's not going to be the best choice. But again, you'll have a choice. So if you want to be more conservative and say, okay, I'm only looking for reversals at levels, you'll be able to do that, and you can set up a notification and you can get all that stuff. So we're working on that now. That overlay is not going to be part of this current script. It's an overlay. It's a separate script. Think of it as an extension. Now, my active investors will automatically get that, but everyone else, it's going to cost a little extra. Okay, what am I going to do? So anyway, just wanted to mention that's on the horizon. Now, before I get into one more thing I have to mention is the links in the description. Do me a favor. If you like the stream, press the like button, press the subscribe button. Make sure to check the links in the description. If you want to try the TradeScanner Pro out for 2 weeks free, there's a link in the description. And you will not be billed for 14 days. So you can try it out, not get billed. If you wait until day 15 and then you tell me, oh, I forgot, or oh, I meant to do this instead, there are no refunds. So please be responsible. You can cancel anytime. It's very easy to cancel. So try that out. 14-day free trial, link in the description. Also, if you would like to try the TradeScanner bot signals, but you don't want to sign up for the script, there's a link in the description there as well. Each week, you get trade of the week, right? That was sent out earlier today. The markets rotate. It's 1 week, it's like a coin. 1 week, it's for a Forex pair. 1 week, it's a stock. And it sends you an email with the entry, the stop loss, the take profit. It's based on the TradeScanner script, except it's on a 4-hour time frame, and there's no counter trend. But you get an idea of what the signals are like. And if you want to see what the results look like, you simply go to the website here, right? And you click on results, and it'll show you the results for the TradeScanner Pro. So if I click on that here, I'm sorry, it'll show you the trade of the week results. These are the results. Man, a lot of red in there. But anyway, those are what the results look like. So now also on top of that, we have a community, Discord community. There's a link in the description in there as well. There's a free chat area. It's a very nice area. You can get questions answered. There's a lot of good information that flows through there. So check that out. Again, that's free. Now, if you want to sign up for TradingView and use a premium version, you don't need to for the TradeScanner Pro. You do not need to, but there are some nice benefits if you use the TradingView premium version. Like you can use more notifications. You could look at more charts. There's a lot of things you could do. You could put multiple tools on your charts, a lot of benefits, and you can save $15. If you use that affiliate link in the description, that small cut goes to Stian. So that's one way to support the community. Also, if you'd like to try another exchange like Bybit or MEXC, fund an account and place trades, Stian also gets a small cut. So you can consider those affiliate links as well. Now, if you don't want to use any of those things, but you'd still like to support the community, you can tip Stian, right? There's a link there for Ethereum. There's an Ethereum wallet and there's a Polygon wallet. Anything helps, but he would appreciate very much if you want to show some appreciation. The money doesn't go to me. It goes straight to him for his hard work. I mean, the guy is taking care of all the technology. He just sent me the update for the TradeScanner Pro. He's working on the support and resistance module. So, I mean, there's a lot going on and anything helps. So if you'd like to support the community, you can do it that way without having to pay anything else. All right, enough talk. Man, I've been talking for a long time. Let's get into the economic calendar very quickly, shall we? Isaac, good to see you. Alex, someone poke BTC. Right, yeah, we'll talk about that. Sam, good to see you. Sam, all right, good to see you. Just saying hello, you guys. The Unboxing Channel from Florida. All right, I hope you're unboxing cool things. All right, now, economic calendar very quickly. There's only a couple of things worth mentioning this week. Tomorrow, I believe it's tomorrow. Today, yeah, tomorrow's the 18th. I believe it begins on the 19th is really where all the action begins. And what we have, there may be something tomorrow. I can't remember exactly. But on the 19th, we have Swiss National Bank interest rate decision. We also have on that same day, British pound interest rate decision. So those aren't global market moving rate announcements, but they can have effect on your Forex pairs if you happen to be in some of those pairs, if there are any surprises. Typically, those numbers are non-events. typically, but there could be a surprise. I believe it was on Thursday. There was another bank. Oh, I'm sorry. Bank of Australia was tomorrow. So let me rewind here a bit. Tomorrow is Tuesday. I believe we have Bank of Australia rate announcement tomorrow. Double check this just to make sure. Wednesday, we have Swiss National Bank and we have Bank of England. And Thursday, I believe there was an S&P PMI number, something like that. But again, there were nothing besides the rate announcements. There was really nothing worth mentioning. Now, something I just want to mention this too, and maybe some of you know something about this because this was new to me. But I got an email about Wednesday being some sort of market holiday, Juneteenth Day. Are you familiar with that? I've never heard of that before. And the market closes, there's a half day on Wednesday. Anyone hear about this? Because I was like, what is this? So on Wednesday, apparently there's a half day and the stock market closes at 1 p.m. Eastern time. So if that's true, I mean, I got an email about it, so obviously it must be true, but it wasn't on my economic calendar. I don't know what that's about. If that's true, then expect lower volume. We are in a declining volume environment. So this is very important. It's part of your overall context. And the volume will continue to decline until weeks 3 and 4 of August. And we will not see back to decent normal volume until like the first week of October. That's the typical cycle. Now, it doesn't move in a straight line. It fluctuates. But as volume gets lower and lower and lower, we have days like today. Now, you see the stock market's up a ton. And you're like, wow, what's wrong with that? But it's a slow grind. It doesn't pull back. And when it does pull back, it like comes out of nowhere. So it's a tough environment. If you get caught with any type of opinion or something like that, it can be very costly. So please just understand that. Expect less in a low volume environment, especially in an environment with declining volume over time. When we have when volume begins to expand again, that's when movements make more sense. You can expect a little more out of them and things like that. Now, one thing I want to mention before I get into the chart. So that's pretty much the economic calendar. Guys, if I mentioned anything wrong, please correct me because I don't have the calendar in front of me right now. The other thing I want to mention is there are 3 types of trades that you should consider. I mean, you can apply this to any system, but when you're working with TradeScanner Pro, there are 3 types of trades. There is the reversal, there's the trend continuation, and then there's the random. The random trade can be any trade. It could be a reversal. It could be a trend continuation. It's the trickiest. It's the one we want to avoid. It has a 50% probability. Now, it may work out for you, but it has a 50% probability. In a declining volume environment, it's harder to deal with those because a lot of times you're going to get signals that don't work out. They're erratic. It's very erratic. So if you want higher probability, then the best signal to look for is the reversal signal. And the reversal signal is higher probability because it typically occurs at a location that we can determine in advance. So we'll talk about that in a moment when we get to that. All right, so any questions about any of the things I just mentioned? So we can talk about this chart. Any questions real quick? All right, again, press the like button, press the subscribe button if you like my content. Now, let's open up this chart a bit and let's make me small because you don't need to see me so big. And let's talk about this Bitcoin situation. So in my article that I wrote yesterday on TradingView, as you can see here, I've been looking at this scenario right here, the pullback into the bounce between the 64K and the 66K supports. As you can see, the market's trying to bounce. It pulled back further, and my scenario so far has been somewhat correct. The market's been somewhat following it. Now, keep in mind, this is the scenario. When I illustrate a scenario on the chart, that's the one that I suspect has the greater probability out of all the scenarios. Keep in mind, probability means anything can happen. It's just there's a greater chance that one scenario can happen over another. This is a scenario that I've been anticipating, and it has to do with the levels and the broader trend. Like I wrote in the article, there are only really 2 components. If you're looking to get a grasp on things, you have to stop wasting your time with things like the RSI and fake gurus and all that other garbage. Really, you just need to focus on trend and levels. If you can just do that, you will have more valuable information than most of the other retail traders who are confused and can't figure out why they can't make money and who will never make money. So here's the thing. The title of today's stream is, are we still in impulse, right? I called it here, impulse structure analysis. What impulse am I talking about? Well, that all has to do with the wave count. And as you can see, recently, I labeled these subwaves on my chart because I was able to count 4 waves. All right. Once I'm able to count 4 waves, then I put the label on there because that's the only time when they really matter. They don't matter. If there's only 3 waves, then you're looking for the subwaves within those 3 waves. Otherwise, you're wasting your time with the wave counts. An impulse wave, when it works, it gives you a better idea or a better roadmap as to what is likely to happen compared to just trying to label every wave and ABC this and X wave that and all that other stuff. It becomes very confusing. You want to avoid that. So you want to only look for impulses. That's what this 1, 2, 3, 4 is in Roman numerals. I put the Roman numerals to show that it's a subwave structure. It's not part of the main wave trend. These are subwaves within the broader structure. The broader structure is this thing right here. Here, let me put a rectangle on it. This is the broader structure right now, and it's a consolidation. That's pretty clear. And inside of that consolidation, we had a bunch of these consolidating type of waves, which can be very confusing, and they can plant seeds of opinion. You don't want to get caught up in that. People are like, oh, well, it's going to do this next. Oh, it's going to do that next. You don't know what it's going to do next. But at a level, you can say, well, at this level, history may repeat itself, and you may get a bounce. It's more likely. So that's why the levels are better. If you just look at levels and general trend, you're better off than trying to count the waves. But when I spot these waves, I put them on the chart. Now, we've been looking for wave 5. We thought maybe that this attempt over here would have been wave 5, but it formed a double top instead. So that doesn't cancel out the impulse until we cross wave 1, the wave 1 overlap. And I wrote about this yesterday. That is a standard rule when it comes to identifying impulse waves. Wave 1 and wave 4 must not overlap. If they overlap, then we don't have an impulse wave. It invalidates the impulse structure, which changes our expectations. That's why it's so important. Now, the big question is this an overlap? I saw some questions in the free channel about this. Sam had a question about that. I'm sorry, Sam, I wasn't able to answer that myself, but I'm going to answer it here for you. This overlap, and Alex answered this correctly. Alex actually answered that question, and he answered it correctly. This is hardly an overlap. When you have a bunch of tails overlapping each other, look at this. See these tails over here? That's wave 1 and wave 4 overlap. See that? I'm going to make it big so you can see. See these tails? You got tail over here, and you got tails over here. See that? That's not an overlap. That does not count. For people that are all precise and everything and think that markets are precise, they're, oh, it's an overlap. That's not an overlap. Tails don't count in that type of situation. If we had a solid close below the support, if we had something that looked like this, big red candle, that's why I drew this box over here. If we had a solid red close, that's your overlap. That's it. If the market does that, if Bitcoin closes inside of this vicinity right here, if it does something like that, then we can say, all right, it overlapped and we're no longer in an impulse. That now changes our expectations. That scenario changes our expectations. And in that scenario, we're likely to see a retest of 60K and 56K in that scenario. It's not necessarily bearish. It just means we're still in the consolidation. In order to get bearish, we would really have to take out this level here. So be careful what you consume. A lot of frauds, when they see the big red candle, if we get one here, big if we get one, they're all, Bitcoin going to 25K, all that nonsense. Don't take that to heart, please. Take it with a grain of salt. All it means is it opens up the possibility of retesting the range lows. And range lows in a broader bullish trend provides bullish opportunities. especially for swing traders and investors. If we're testing 56K, that may be a good investing opportunity. Make sense? So that's the structure, right? That's the impulse structure part that I wanted to mention. Let me know if you guys have questions about that. We have Milad. Hey, Milad, our office is also closed on Wednesday. It's a national holiday. Oh, okay. That was not clear in the email. Thank you for making that clear, because the email I received was not that specific. All it said was it's a half a day. I'm like, half a day for what? Okay, thank you, Milad. So, and good to see you. So that's the bearish scenario that we could potentially see this week. Now, let's talk about how we can get there. What can happen? And I want to point out these current candles here. So you have to recognize, like I said at the beginning of the stream, there are reversal patterns, there are continuation patterns. Continuation patterns typically don't occur at specific levels. They can occur anywhere. They're more relative to the momentum that's in play at the moment, which is this bearish structure right here. Like this inside bar. That's a continuation pattern. I talked about that over the previous week. These little candles here are essentially the same. These two are inside bars relative to the larger candle. Here's the larger candle. So as long as the range of these green candles stays inside that candle, or you can even take it a step further and say inside of this range right here, which is both of those red candles, that's an inside bar, basically, which is a momentum continuation pattern. And momentum right now is bearish if we look at the broader structure. This is very important, especially for swing traders. Now, it doesn't mean that it's going to be bearish. Look, there was an attempt here. See this attempt today? At one point, we took out the lows of these other inside bars, and then we have this long tail, and the support held. So this is a very tricky area. 65K, 64K, it's still in play. So I would not be bearish just yet, but you have to be careful. If over the next couple of days, we're taking out this low, then I would say bearish momentum's in play. I would say the overlap is confirmed, and then we're likely to test these lower supports. If we do not do that, and instead we see candles start to work their way back up to here, then you have your answer. Now, how do you navigate this? Well, first of all, you know your levels. This area, 64K, 65K, 66K, this is generally a support area. So if you're a day trader or a swing trader, you're looking for confirmations, most likely counter trend confirmations. But with these little bullish candles, these may show bullish trend on your smaller time frames. So in that scenario, you may have to look for trend following or momentum continuation on smaller time frames if you're using the TradeScanner Pro. Does that make sense? If you get a large green candle working its way up, especially if you take out this high right here, you take that out, you should be looking for momentum continuation. When is the best time to be looking for momentum continuation? I'm going to tell you right now. When you get these big candles that look like this, right? This is a daily time frame. So when you get a large green candle, you're like, man, this thing never pulls back. How do I get involved? Well, the thing to do is you go to a small time frame, like maybe a 5-minute or a 15-minute, and you look for a micro pullback on there. This is where the TradeScanner Pro shines. But if instead you just go to the TradeScanner Pro and you just take any random signal without any clue of where your location is and why you're taking it, you're going to get very mixed results. And this is what happens when I get these beginners who sign up and they cancel like in 2 days. And when I reach out to them and say, I'm just curious, how come you cancel? Oh, the thing doesn't work. The thing has a 50% win rate. I could have told you that it has a 50% win rate. Win rate is not the key. Reward risk is the key. Let me make a point here since we're talking about win rate, because I get that question a lot. When you are in control of the trades, it's not the system's win rate. It's you're going to be responsible for the win rate because you're not going to behave exactly like the system. Win rate is important when you're using something that's automated like an algo. and you're not in control. The algo is taking the trades for you. So a fair question to ask is, what is the win rate? Because the algo is going to do its thing exactly the same every time. But when you're in control, like using a tool like the Trade Scanner Pro, then the win rate is in your hands, because you're not going to let winners run maybe as long as you should. You may get out early. You can make mistakes. So the win rate is going to be irrelevant, right? But typically, we can argue that the standard win rate is 50%. It's random if you take a typical signal. If you want less random, you look for a reversal at a level. Does that make sense? So I demonstrate that each week. If you have, I clipped my previous stream and I clipped the section where I talk about the support and resistance levels from the 1 hour chart and how to use all that. If you haven't seen that, just go back to my YouTube channel and click on that. It's a lone video. I think it's probably about 20 minutes long or something like that. And it explains all that there. But I do it in every stream. All right, so do we have any questions? Any questions about what I've covered so far? Does this make sense? So my goal here is to give you perspective so that you can make sense of this information and apply it to day trade strategies or swing trade strategies. In and of itself, this daily chart really doesn't give us too many opportunities, because we're not at specific levels and there are no confirmations or formations or things like that. We don't want to force trades. So people that come here and they're like, oh, you always tell us a bullish thing and a bearish thing. You never tell us where the market's actually going. It's because I don't know where it's going. The idea is to show you the levels so that if the market presents an opportunity, you know what to do. And if you have a tool to confirm what you're looking to do, like the Trade Scanner Pro, then you're even in a better position. So what I mean is, before you take a trade, you have to know what you're looking to do. I ask people all the time, well, what was your goal? Well, I just want to make money. Yeah, we all want to make money, but it has to be more specific than that. You can't just generally take a trade and think that magic money is going to appear in your account. You have to have a reason. Like, oh, I'm looking for the reversal at support because we're in a broader bullish trend. So I switched to counter trend mode. I'm looking for longs. Good reasoning. Or we're at a resistance. It's an aggressive short. I'm willing to give it a try. I'm in counter trend mode looking for the short. Okay, good reason. You know it's aggressive. You know to expect less and all those things. So it does help if you have a little experience. But if you don't, if you're brand new, just listen to what I'm saying. Just focus on the reversals and use a larger time frame, like a 15-minute. Your results are likely to be better because you will have less random trades. All right. Any questions? I don't see any questions. So does this make sense as far as this price action right here? This is tricky price action. And at the moment, supports have held, they're in play, and we can say wave 4 is intact. If wave 4 continues to stay intact and we don't break this support, then look for wave 5. That's the conclusion. Look for wave 5. Wave 5 can be the higher high. As you saw at the S&P and NASDAQ today, the ridiculous move to new highs, this can do something like that, right? That would be wave 5. Even though it's starting out not so great here, all you have to do is get a little higher low or a double bottom or something like that. And next thing you know, you have the dramatic leg higher. And the funny part is that's when all the frauds and all the novices show up. Hey, Bitcoin's action. Now is the time to get in. You want to get in, or you want to get involved when it's quiet, when no one's paying attention. That's when the opportunities appear, when no one is paying attention. Okay, Sam, if this daily candle closes here, would you consider this a double bottom off support? Good question, Sam. Here, let me put that in so people can see it. That's Sam's question right there. So he's asking if this would be a double bottom. You know what? Let's make this bigger. I mean, yes, I would consider this a double bottom. I mean, look at the lows. Look at these two lows. If we close like this and the next candle stays strong, like the next candle, even if the next candle fools around a bit, but it closes stronger, I would consider this a double bottom. So you sort of have that situation right there. And like if that double bottom stays intact, you're looking at some sort of wave 5 attempt, at least an attempt. And that's what this illustration is for, an attempt. And that attempt can take you back up in here. I don't know if you'll get the higher high, but theoretically you should, because the general trend is bullish. Bullish trend means higher lows and higher highs. Make sense? Okay, good question. All right, so I'm going to move on now because I want to see if we can get some signals and I can demonstrate the Trade Scanner Pro. So let's first change this chart. And if you guys have any other questions, maybe it takes a little time for you to hear what I'm saying. Please don't be bashful. Type it into the channel. I'm not going to make fun of you. So let's go to Bitcoin Perp. And we're going to change this. Okay, hold on a second. Yeah. Let's go to Bitcoin Perp. The Perp means perpetual futures. It just means the futures contracts always update. And we're going to go to MEXC. I just choose that just to match the exchange. It doesn't matter what exchange you use. I'm just using that to illustrate. Doesn't matter. All right. Now, this is the daily chart. We're going to change this to a 1 hour time frame. Here's the 1 hour Bitcoin. Now we're going to turn the Trade Scanner on. All right. Trade Scanner is now on. This is Trade Scanner Pro. And you can see these little boxes right here. That's how you know it's on. And I'm then going to make this chart smaller so we can see what's going on here on the smaller time frame. So I have here a 1 minute chart on the right, and I have a 1 hour chart on the left. So real quick, and I like to do this on every stream, I want to explain how the Trade Scanner Pro works for those of you that may be new. So the Trade Scanner is a momentum reversal system. It's a trend following momentum reversal system based on criteria that I use as for one of my strategies. So let's say the trend is bullish. What it does is it looks for a move on the bullish trend, whatever the trend is, and it looks for a pullback. This is what it looks for. Once it gets a pullback, it evaluates the pullback for momentum, and it looks for this. It looks for confirmation. Once the continuation momentum confirms, it will send out a signal in the form of trade suggestions. It begins with a stop loss, an entry price, and a take profit, which is typically 1.5 times whatever the stop loss is. Now, the stop loss is generated from market-based information. So you don't decide what the stop loss is or the risk is. The market decides that for you. And once this entry opens, what you're looking for now is continuation up to the take profit. Now, there's also a trailing stop, which means it can go beyond the take profit and you can capture more. I sent out a Bitcoin example on Twitter just a few days ago where Bitcoin bounced off of 66K. There was a signal on the 1 hour chart. And if you had taken that signal and managed to hold on, it was worth 3,400 points at its peak. 3,400 points. It blew right through the take profit, which was 1,500 points. So there's a lot of potential with this tool. And for people that like cancel it, it's like, man, I'm sorry. If you don't see the value on that, you just be prepared to donate all your money because not too many tools are going to help you have the potential to capture such a move. So that's what the standard mode of the Trade Scanner, that's what it does. Now, the Trade Scanner Pro is the script that we converted for TradingView. The Trade Scanner bot is the one that sends out the signals by email, which you could sign up for free, I mentioned earlier. But the Trade Scanner Pro is the TradingView script version, which means you could take it and use it yourself for any market, any time frame. Now, one of the cool features about Trade Scanner Pro is it also looks for counter trend signals, which is what this is right here. It looks for signals that are going against the trend. And those can be valuable if they're taken within the proper context, like knowing your levels. Also, you can use something like that when you have a situation where you have the bigger picture trend, let's say, is bullish, but the smaller picture trend is bearish, and you're looking at a pullback going into a major support level, like we had with that Bitcoin trade. The 4 hour gave a warning, which I'll show you here in a moment, and then within 12 hours, the signal appeared on the 1 hour time frame, not on the 4 hour. It was on the lower time frame. But that's where you would be in counter trend mode, and you catch that thing, and man, and that was a pretty obvious thing to see. So let me just go over the controls real quick. When you get the TradeScanner Pro, all of these are blank, so you want to turn them on. This one here is the historical trades. As you can see, you got this little pop-up here on the chart. That was a previous trade. And if you have a premium version of TradingView, you can play those trades back to see what they look like. Then you have here heads up. Heads up paints orange candles on your chart, like this one. An orange candle means a signal is likely to appear soon. In the case of a 1 hour chart, it may appear in the next few hours. If you're on a 1 minute chart, it may appear in the next few minutes. All right, so it's relative to time frame. Now, let's take a look at the next feature here. We have the trailing stop. That's pretty self-explanatory. I just explained that when I pushed a new update, you'll be able to control the speed of the trailing stop. That starts to, the point of the trailing stop is to help you ride winners longer. That's how you turn a 1,500 point profit into a 3,400 point profit, or at least something close to that. Definitely more than 1,500 points. And also it reduces your risk. Counter trend puts counter trend mode on. So notice it called a long over here at the bottom of this move. Interesting, right? That's counter trend mode. All right, so now I'm going to turn these off because that's the 1 hour chart. We don't need these on the 1 hour chart. We're going to use these on the 1 minute chart. But why do I have the 1 hour chart open here? Because when you're new using the TradeScanner Pro, and like I said before, you want to focus on high probability before trend continuation, because trend continuation is going to be a little harder when you're less experienced. So I said, you know, I want people to be able to use this thing more effectively and have trades that are more likely to work out. So what do? You look at your bigger picture. In the case of working with a 1 minute chart, now I realize some of you may not be day traders like this, but you can apply this to your time frame. If you're looking at a 15-minute chart, you can apply what I'm showing to you like between a 15-minute and a 4 hour, or a 15-minute and a daily. You want to look at a larger time frame than the time frame you're working with. When you're working with a 1 minute, like I'm going to show you, you can use a 30-minute or an hourly. I like the hourly. It doesn't matter which one you use. I want to get a sense of levels. The trend tells me here that it's bearish. Here, I'm going to make this chart bigger. The trend up here says that it's bearish. See that? Bearish on the 1 hour, because there's obviously lower highs and lower lows. Now, so we're in a bearish trend. I have a red candle at the moment, and I'm looking at levels. Clearly, this is a support level. Can you not see that? The market, reacted off of this level dramatically 2 times. So we can see that after the fact, and that's what we want. That's how we want to see it. There was also a level here. That was a previous support that was broken. We can find some resistance level. Old supports become new resistance. Look, resistance here. Over here, it was support. See that? So I'm projecting these forward. Now, like I said, we're working on an overlay that will generate these levels for you. But right now, we're working on it. It doesn't exist yet. But right now, you have to do it by hand. It's good to do it manually because you learn that way. Now, so this is a resistance. Would you agree? We're at a resistance level. We're certainly not at a support level, although there may be some minor support here. Look at this old resistance. That could be a minor support, something I need to be cognizant of as a day trader on a 1 minute chart. When it comes to day trades, it's a little more complex. I'm trying to keep this as simple as possible. But in general, let's see what the crowd here says. Would you agree that this area is a resistance area or a support area? How would you classify this area? Resistance or support? Let me hear you guys in the chat. Let me see what you guys have to say. And don't be shy. This is how we learn. And by the way, if you like the stream, don't forget to press the like button. Don't forget to press the subscribe button and check out the links in the description. You can try the TradeScanner out for free for 14 days. You can cancel anytime. I'll show you the website here in a moment, but I want to see what people have to say. Samuel says resistance. Okay, cool. You got it. Kai, this is rock. So Kai is just being a funny guy. Okay, cool. Kai, thanks, Kai. Kai is being Captain Obvious. Anyone else besides Kai? How about Ken? Resistance. Okay, you guys got it. So that's pretty clear. It's resistance. So if I know that this is a generally resistant area, should I be looking for longs or should I be looking for shorts? What do you guys think? I'm trying to form my purpose right now. What should I be doing with my trade scanner? I'm not going to take random signals like all the novices who sign up for it. I want to take a signal that's going to give me a little bit more of a probability, something greater than 50%, hopefully. Should I be looking for shorts? Should I be looking for longs? What do you guys say? Long. Yeah. All right. No novice responses. Shorts. Okay, right. So you guys are pretty clear. I know the question might be a dumb question, but hey man, you'd be surprised sometimes. Unbelievable what kind of responses I get. Anyway, so we know, right? It's pretty clear. It's resistance. So when I go to my smaller time frame, I'm forming my general idea. I don't like to call it an opinion because it'll change in a moment's notice if the market changes. It's not really an opinion. It's just my general idea. Should I be leaning on longs or should I be leaning on shorts? I should be leaning on shorts. So that brings me, and I also have some levels to play with. Now, like I said before, this little area right here, an old resistance, may act as a support. Look at what's happening on the 1 minute. It is somewhat supportive, but it's very minor and it can easily break. Now, so I'm trying to get an idea of what should I do? What kind of signal should I look for? I can be aggressive and I can try taking this minor support. And I think I may do that just for illustration purposes so I can show you guys a trade. But the higher probability thing for me to do would be to wait until we test one of these minor resistances or something like that and get a short signal. That would be the higher probability thing to do. So I know this in advance. This is how you should be thinking before you even think about a trade. You're putting the puzzle pieces together. What should I be thinking? What should I be looking for? And like I said, you can apply this to larger time frames. I'm just showing the 1 minute so that we can get some action here. So I have an idea. I have a minor support. I have a major resistance. It's a little conflicted, but okay, that's the idea. Now let's switch over to our 1 minute and let's see what we can do now with that information. So I know I'm fooling around at a support that can break, that can easily break. That's what this is. My trade scanner says here that, what does that say? I'm in a bullish trend. Trend is bullish. Interesting. And I'm at a support level. I'm at a minor support, but generally we know that this area is a resistance from our 1 hour. That's what these lines represent. We know that this general area is a resistance. Okay. So, wow, it would have been nice if I shorted this. It would have been nice if I shorted this. And now we're sitting at this minor support, and the minor support is likely to break. So what do? Trend is bullish. How do I get short? Well, first of all, I'd have to wait for some sort of reversal, right? The trend is bullish. That means right now, if I'm going to get a signal, the bullish signal should appear here. If I change this to counter trend mode, counter trend. Look, there's a signal in play. Oh, it's too bad I was talking for so long. That would have been nice to take. Counter trend mode shows the shorts. Wow, look at this short. This one obviously failed. This one failed. And look, these are at resistance areas, right? This is a resistance area. Look at that. And these two shorts right there stopped out. So that's a good example. Like that can happen. And then this one worked nicely. So you're not always going to catch this one first. You may get caught in this one first. That's what the whole point of like having the trailing stop to help you. Now look at this. So this trade right here is almost at the take profit on this time frame. See that? Now, being that the general area is a resistance, if you're in a situation like this, how does that affect your decision making? Who wants to answer? Let's see what you guys have to say. Peter says shorts. Okay, you guys are on with that. So now what do I do? Like I can't do anything. I missed this trade. I'm not in the trade. As far as decision making, what do I do here? Open short on 5 minute, Sam says. Okay, on the 5 minute, let's take a look. This thing just started. Oh, it's recent. Okay. Well, the 5 minute, that's this. I mean, look, Sam, the 5 minute, where was, oh, that started over here. Look at that. The 5 minute has been short for quite some time. The 1 minute just pretty much got short, what, back here? Was it like maybe 15, 20 minutes ago? So again, I don't want to force things because I want to get something that's likely to work. I mean, I'm tempted to short this, right? Like, oh yeah, short it, it's going lower. But look where I am. This short, we're at to take profit of it. So if I'm not in it, I'm not in it. Look, the trailing stop is now at break even. If I was short, this would be beautiful, but I'm not short. So what do? I can be aggressive and try to take the counter trend signal because this short should be over pretty much here. But like I said, if the answer I was looking for, I asked the question, like, what do I do in this situation? Either nothing if I'm not in it, but if I was in it, you try to let this ride. The trailing stop is now at break even. See that? This is a risk-free trade. You try to let this ride because we're generally at a resistance, and this thing is likely to pay more than this take profit. How much is this take profit anyway? Let's see. How much was this worth? $161 points on the 1 minute. That's what that's the profit was worth. 161 points. So if you were short, you could take that 161 points right now, basically. And if you give it a chance, right now your take profit has moved. This is a break even plus trade. This is a profitable trade no matter how you cut it, if you respect the levels. Now, this thing just continues. Okay, that's the whole point of the trailing stop. Now, was this trade random? Well, it's coming off of a major level, a major area. So it makes sense. Like, this is not exactly, we could say that this was less random. Same with this one. These should have been less random, but they never worked. That's part of the deal. Sometimes that's going to happen. But when you lose, if you lose a small amount, but when you win much greater than what you lose, that's what puts you ahead. That's your reward risk ratio, which is set at 1.5 to 1 by default. That's what it says here, 1.5. You could change that. If you go to the settings, you can change the reward ratio to whatever you want. You could change it to 2 to 1. You can change it to 3, whatever. But if you're new, just leave it at 1.5 to 1. If you're more advanced, then you decide based on your expectations. In a situation like this, since my short expectation would be greater, maybe 2 to 1 would be a little more appropriate. Right? You might as well give it a chance because you're at a major level. Now, so let's see, how am I doing with time? All right. So I'm not going to do anything on the short side with this right now because chances are there's a greater likelihood that it'll attempt to bounce. Why am I going to short it now? So you can't give in to that temptation. What I am going to do, so I'm going to go to counter trend. Actually, I'm in counter trend mode. I'm going to go back to trend mode. Right? Now notice this on trend mode. Look at the orange candles. It's giving us some warning on the bullish side, even though the location is in conflict. Which component carries more weight? The location or the heads up? Which carries more weight? Oh, I don't have my, oh, they kicked me out of the paper trade thing. Can I turn it on over here? Let's see. I don't think I can turn it on. Let me see something. Oh, yeah. See that? Okay. I should have checked that before. Location, Sam says. Yes, the location carries more weight. Sam is advanced. Sam's not a beginner, so he knows that. If you're a beginner, though, you're most likely gonna think that what you see in front of you carries more weight. But no, it's the location. So knowing that, if I'm planning to go long this, right away, right off the bat, I'm planning to do something that's low probability. I should know this going into it. First of all, I'm getting some warnings. So this is going to be aggressive. I can't actually illustrate it on the paper trade account because I got kicked out. So I'm going to have to reactivate that. So we can still get the idea here. And we'll see the signal appear on a chart when a signal appears. Now, we're getting these warnings, but the price just continues lower and lower. So you don't want to take a trade on a warning unless you're extremely aggressive. Like if you're new, you don't do that. I've done many examples where I've taken trades on paper here on these warnings, and I just get hammered in the trades. Because again, those aren't signals. All it is a heads up that tells us that soon a signal may appear. And in this case, my trend is still bullish. And you'd be like, how is the trend still bullish? This thing is going lower. The trend is still bullish because when we look back a bit here, look at this. This is why the trend is still bullish, right? It hasn't turned bearish yet. But if this keeps going, eventually it will. But as long as it's bullish, we just want to keep that in mind. But this does not carry the same weight as the location. This trend is only relevant to this 1 minute chart. And trends on 1 minute charts aren't the most reliable. So it's important to understand what's ideal is when your 1 minute chart aligns with the bigger picture trend. So in the case of the 1 hour chart, if I flip back over here, the 1 hour chart, the trend is bearish. See? See what it says up there? Bearish. This is what carries all the weight, not the 1 minute. So it's important to recognize your multiple time frame situation. And that's why I said we're working on a support and resistance module so that these lines can be drawn for you in advance and you have a better perspective rather than getting caught. Because I know that's what beginners are doing with this. See, a guy like Sam, he's not a beginner, so he understands. But a beginner is going to be like, I'm not making fun of you. I'm just saying, a beginner is going to just react to what they see, and they don't pay attention to the larger time frames. Now, taking a long here would be extremely aggressive. There's no signal yet, but I'll tell you what. I'll just mention it. What's the price here? 66,603 long. All right, so let's just say I'm long one there. I'm going to type it in. 66,603 long. Okay, let's see how that works out. Okay, it's in the channel. Putting it in the channel. What does that say? Oh, it wouldn't let me put it through. All right, 66,603 long. Won't let me type it. There we go. That's my long. Okay, that was the long. Oh, look, there's a signal. So now let's see how it gives it back right away? Man, it gives it right back. Look at that. What's the stop on that? 543. So I'm long from 603, and this thing goes straight to the stop. That's what I mean. Like it's not stopped out. Look at that. We're at the 4 o'clock close. We're at the market close. So you can see that was an aggressive long, and it just completely failed. Again, I'm taking this at a really bad time of day. 4 o'clock close, not a good time. But this may turn into another signal. See, it's just noise from the close. This may turn into another signal, and I'll take the second signal. Now, that first signal was actually an early entry. Hourly about to have a bearish engulfing. Okay. Now look at this, though. Okay. I'm going to wait for the next signal. I don't know if we're going to get another one right away. This actually, the candle just closed. So I was actually right on the long. I just got squeezed out of that one little move. Let's see if we can get another signal. Again, it's a 1 minute chart. It's very noisy. Now, one thing I wanted to do here while I'm at it, let me just type this into the channel too. Okay, let me make sure I spell it right. I can't spell sometimes because I can't see. All right. Oh, all right. So what I'm doing here, so I'm putting this is the link to, if you want to sign up for the, wow, I'm getting another rejection here. Man, YouTube just doesn't like me today. I'm going to type it again. What's wrong with them? Look at that move. Okay, there it is. So, I mean, look, my general aggressive idea was right, but it's tricky, right? You see that? So I can't sit here and be like, oh, I missed out. I was taking a bad trade to begin with. here, let me put this here so you could see. So this link that you could see here, if you go to that link, it's also the same link in the description. If you go there, that'll take you to this page right here. This is the TradeScanner Pro page. It explains how it works. It explains some features, tells you a little bit about me, and then it takes you to this right here. This is where you sign up. Now you could sign up for 14 days for free. You will not be billed unless, of course, you wait until day 15. For the year, you're paying $22.50 a month. If you want to pay the year up front, that comes to $270. For the month, it's $30 a month. Now, if you can't afford $30 a month, like again, I'm not here to shame you, but you need to cancel Netflix or something, because Netflix doesn't help you at all in any possible shape or form. It just wastes your time. Something like this, you may be able to actually make better use of your time. Okay, so you click on this here, and it takes you to this page. I'm going to show you the page, right? The form. You fill out this form, and you make sure that you put your TradingView username in this field right here. If you don't do that, we can't send you an invite. The invite right now should come within an hour, but it depends on what time you sign up. Certain times of the day you sign up, it may take like 4 hours or something like that. So please be patient. So again, this is for the year, $270. But you can pay month to month at $30, and you can cancel anytime. You have a 14-day free trial. If you take the free trial, I strongly suggest to paper trade first and go back and watch my streams. Wow, look at that. Go back and watch my streams so you get an idea of how to use the tool effectively. My speech is better today, right? I'm trying very hard not to say those two filler words that I like to say 10 million times during a stream. Now, what do I do here? Okay, so in this situation, again, we shouldn't be that surprised because we know that the location carries more weight. But I got no signal here. No signal. What good is this thing? Well, I guarantee if I check like a 15-second time frame, you check the smaller time frame. There's a signal right there. So 15 seconds, you'll be like, I don't even have access to a 15-second chart. That's okay, because you shouldn't be looking at 1-minute charts anyway. But if you're working on a 15-minute, for example, you check the 5-minute or you check the 3-minute. A lot of times the signal will appear on the smaller time frame. Like that 4-hour example. Let's see if I could show you that here. The 4-hour example from a week ago, that example occurred, I believe it was here. Was it this one? I believe it was this right here, right? It started out with the warning over here. Yeah, if I put this in the counter trend mode, we'll probably see it. Yeah, see this? Look. On Twitter, I put out a chart right here, and I said in the next 8 to 12 hours or whatever, a signal is likely to appear. Now, it never appeared on the 4-hour time frame. It never appeared. But if you go to a 1 hour, you will see it. Okay? Look, this was the signal on the 1 hour. There was one before it that failed, and then this. The 4-hour gave you the heads up, and this was worth 3,400 points if you managed to hold it that long. If you held it longer than that, you had a problem here. But that's what the trailing stop is for. That's the beauty of the trailing stop. If you respect the levels, you would have locked in more than 1,500 points if you had followed the trailing stop, which is more than 1.5 to 1 reward risk. Okay? Let's go back to our 1 minute, and let's see if I can continue with this example here and what we're seeing. So look, this thing is completely getting hammered, and we shouldn't be surprised. Now, again, what do I do here? The signal was like on a 15-second chart. So I can't do anything here. Notice also here, my trend turned bearish. See that? So if I go into counter trend mode now, I'll be looking for bullish signals. If I go into counter trend mode now, clearly, if I go back to my 1 hour, this minor support that I suspected was minor support was ineffective, right? But it was minor. I was not expecting anything major here to begin with. I took that one aggressive entry. It went straight to the stop. There's no reason to add more or anything like that in that type of situation. So if I'm looking for longs now, where should I be looking for longs? It's either going to be here in this area, or I may get something sooner, but there's really nothing on the chart. I mean, this area possibly, right? Again, another minor area. But this can also be relative to like a fib proportion, like the halfway point or maybe the 618. Those might be secondary references if you want to be aggressive. Those things do not do anything magical. They do not provide a lot of weight. The weight is historical, meaning action occurred here before. Action is likely to occur here again, unless the market proves otherwise. That's the mindset that you have to have. So another situation may be, maybe we get a series of candles in this area right here. Like we get a bearish one followed by a bullish one, followed by a bearish one, and we get like a little double bottom situation in here. That would justify a long if you get that kind of situation. It doesn't necessarily have to go back to this low. It may find support sooner, but if it does, it's nice to see that support established on the larger time frame, not your 1 minute chart. Okay, makes sense? Let's go back to our 1 minute. That's the 1 hour. Going back to our 1 minute. And let me do this. What is going on here? Oh, that's a 1 month. 1 minute. There we go. Okay. So far on my 1 minute chart, the only signal that I could have had over here was that 15-second signal. And you just have to let this thing, if you're not in it and the market's running away without you, let it run away. Don't chase it. The only thing to do here, if you're going to do anything, would be to look for the bounce, but this is not a level to be looking for the bounce. So sometimes it's best to do nothing. Flat is a position. If we had a bunch of warnings here, right? Like a bunch, there probably is. If I turn counter trend mode back, oh, it is on. So if I get warnings here, like we're getting, this one's trying to give us a warning, then that gives us a heads up that there may be a bounce coming soon. But the thing is, it's low probability. It may not bounce very far, like this move here. That bounce wasn't very good. And look where we are now. So really, we should be looking for shorts on those bounces if we want probability on our side. If we want to be super aggressive, like now, we can start buying, but we're taking a big chance. It may bounce. We're playing, at this point, we're playing the 50% game. I'm playing a slot machine. If I start buying right now, I'm playing a slot machine. In these situations, see, good thing I never even put a number in there. In these situations, the best thing to do if you want to be aggressive is at least wait for a green candle. At least wait for a green candle close. At least. So you know momentum may be changing. So you see what's happening here. So initially when I asked you guys in the beginning, should we be thinking longs or shorts? You guys were correct. Shorts. And the market is confirming that. See how that works? Any questions, you guys? That call confirmed my, okay. Cool. So any questions? So again, if you'd like to sign up for the Trade Scanner Pro, again, go to the link here that you see on my chart. It takes you to this page and it explains how it works. And you can try it for 14 days for free. Now, again, you can't just take any signal. That was one of the points that I wanted to make with the stream here. You want to take signals that have probability on their side. So think of the Trade Scanner as a confirmation tool, not a magical system or magical signal tool. It's a confirmation tool. You have to have the idea first, right? Like, oh, I'm going to go long. I'm looking for a long or I'm looking for a short. And this is why I'm looking for a long or for a short. And then you use the Trade Scanner Pro to confirm the idea. So you could sign up for a year or you could sign up month to month. The year, you're saving a little money. Now, by the way, these are preliminary prices. I'm going to raise these prices. Actually, the monthly price is going to go up. The yearly will stay the same, and the monthly is going to go up. So you'll save more when you sign up for the yearly. The yearly is a yearly subscription, by the way. So in a year, it'll renew, just so you guys know. So you could sign up for that here. You click on this button. It takes you here. You fill out this form. Give it like an hour or so, and then you should get the invite. You should get the invite usually within an hour. Okay, make sure you put your TradingView username in there. Otherwise, you're gonna have a problem with the invite. All right. Any questions? If you're short and 64K breaks, where would you be looking to start taking off? If 64K breaks, well, it depends on your time frame. Like, are you short? If you're short the bigger picture, see, in a situation like that, Sam, let's put the 4-hour chart here real quick. So this is 65K, right? If we're looking at 64K, which is here, this area here, and that breaks, that's a pretty important level. If that breaks, the first thing I'd be looking for is 62K. 62 to 60 is the next support. But it depends. Like if you're looking for a day trade, I'm covering right away. But if it's a swing trade, I'm looking for 62 to 60, that area. You can also use the free script that we have out. If you look at my profile, there's a free script, which is called the Trade Exit Calculator. And that will also give you an idea based on the price that you choose to enter. I don't have that here, but it's free. It's basically the same. It's the same system that's used. It uses the ATR to calculate the exits, just like the Trade Scanner Pro, except there's no entry logic. You have to bring your own entry logic, but that can also give you an idea of where to get out because it's based on previous price action relative to the time frame. Make sense? Okay. Okay, cool. All right, you guys, what's this over here? Oh, is this a new trade? I got a new long because it's counter trend. We can watch this for a couple of minutes. So look at this, right? So again, I got the warnings. Plenty of warning there. When I'm on the right, when I'm on the side of the bigger picture and I get these warnings, like if the bigger picture was bullish, like the 1 hour was bullish, for example, like we were in the middle of like this bullish move and I got something like this, I would try to get in early on those warnings. But since we're coming off resistance, being aggressive on the wrong side of that is not a good idea. Does that make sense? We want probability. You want to be on the side of probability. If I was long right now, based on this, what price is this right now? 66,575. If I got long on that, I'm taking a low probability trade. It's aggressive. There's no support here. There's no established support here yet, but maybe it runs a bit. I mean, look where it's projected to run up here. So that's, you want to play the slot machine. You're feeling aggressive. You want to give it a try. Maybe this thing bounces. Maybe this thing produces a little mini double bottom over here or something like that. It's worth a day trade. But again, that's super aggressive. That's not something I suggest for beginners. And this is what beginners do. They see the signal and they're like, oh, I'm going to take it because it's magic. Right? And they go, it should go up here. Okay, cool. And then it doesn't work. And then they cancel like the next day or like in an hour. I get the cancellation. I'm like, an hour? Never even give this thing a chance. That's why, because they take these low probability trades. Don't do that. I'm telling you in advance, this is low probability. It might work. I flip the coin and see how it goes. That's what we're doing. This is a slot machine. Whereas the trades up here are much higher probability, or the trades here in this area are much higher probability. The trades in this area right here, this is the random zone. Anything can happen there. Does that make sense? So you should always be thinking in terms of, am I taking a higher probability or is this just like 50-50? If you want to take 50-50, that's okay. It may work. This trade may work out. It's just 50-50. You can make money in a 50-50 environment, actually, if you win more than what you lose. You can make money. But if you take too many of these random trades and you have all these losing trades, in certain environments like the one we're in now, these random trades are probably have a less of a chance of going your way because, it's very erratic. We don't have a lot of follow through, right? Volume is generally slower. So you may get a few of these that work out, a few of these that don't work out. And over time, you're basically breaking even. Plus you have a cost that you have to calculate. So a lot of times it's not worth it. It's really not worth it. Make sense? Cool. So I'll make this bigger here. So next time I'll have my paper trade thing back up so we can actually see the trades in action. But I mean, you see the signal here, so you could see what to do. Like if I was in this at this point, if I was long, I would just be managing it. Okay, let it do its thing. It's up to the market. It's not up to me. I'm not thinking. That's one of the great things about the Trade Scanner Pro. It takes a lot of thinking off the table. You don't have to ask, where do I get in? Where do I get out? It tells you. If you're wrong, you get out here. If you're right, you can get out here. Or if it goes further, you can try to hold on and let the trailing stop get you out. Those are your choices. So it's an immensely useful tool. It's just if you have a little more experience, you're probably going to get a little more out of it than someone who's brand new. Here's the trailing stop. This just cut your risk by a little bit. Here, you say, what risk? It cut your trailing stop. It cut the stop. See that? Like your risk is now less. If this thing turns right around and goes straight to the trailing stop, you're going to lose less than you originally were planning to lose. Now, as this thing continues higher, the trailing stop is going to start moving further. With the new update that I'm about to push out, you can make this trailing stop slower or faster. So on the next 1 minute close, this thing is going to push up a little further. If this was really fast, it would probably push up like up to here, really fast. So it helps you capture more of your profit. Or if you want to give it some room to play around, you make it slower and it'll sit here for a while as the market goes your way or maybe fluctuates around a bit. Make sense? So let's see how this thing closes here. Let's just do a couple of closes. Let's see how the trailing stop moves. Because so far, it's reduced your risk by a little bit. A couple more minutes. Look, went straight to the take profit. Nice. What a nice trade. And this is random. But you see what I mean? They can work for you. They can work, but you have to be careful. So now you should be taking money off the table. Take something off and then let the other one ride and see how long it takes before the trailing stop taps you out. But at this point, profit has been locked in. Like you should lock in profit. That was a nice move. Well, you could use the 1 month time frame. You can, but the thing is, signals on like a weekly or monthly are going to be extremely infrequent. But you can use them. You can use those time frames for reference points and levels, but things aren't going to change much on those time frames. Like if I go to the 1 month, I mean, things are going to be very, look at this. So yeah, you could say you have a level up here, but look how much further it went than that level. So you can't be precise with this. This can be very messy. In general, we are fooling around resistance generally, but this is really more important for investors, not day traders. Okay, make sense? The time frame that you look at should be relevant to what you're looking to get out of the market. If you're a swing trader, you should be using 4-hour, daily, weekly. If you're an investor, daily, weekly, monthly. If you're a day trader, 15-minute, 4-hour, something like that. So I should have locked in something here. Why isn't my trailing stop moving? This thing's frozen here. What happened? I guess it needs a little more time to start moving there. Oh, it moved a little bit. See, because I have to make see there, it moved again. See that? So now look, my risk has now been cut more than 50%. See this? My total risk was this entire area. But now that area is cut by 50%. That is also another great thing about the trade scanner. It's constantly working to reduce your risk if you're taking trades, for one, that are on your side more than not. But even if this turns right around and stops out, I'm losing less. Yeah, sure, it sucks to lose, but I'm losing less. If I'm losing less and making more in the long run, that's the formula to profitability over time. Not this magical slot machine lottery ticket nonsense that everyone pushes on you. That's why no one likes to listen to my stuff, or I get like no customers, because people want magic and I show reality. I don't show magic. This is reality. As you can see, it's possible to do things in reality. It's just not as pleasant. It's not as fun. It's not as exciting. I'm not buying a Ferrari tomorrow. Okay. But man, nice trade. All right. Any questions? So you see how this thing is working. Look, try this out. Try this out for 14 days if you haven't yet. And if you don't like it, cancel. But I want you to like it because I want it to work for you. That's why it's $30 a month. You realize in one trade you can pay for your month if your account is decent enough. Like, again, you can't do this with a $200 or $300 account. If you have less than $1,000, do yourself a favor, quit. You're gonna lose the money. You can't grow. You can, but you have to. It's going to be very slow. You might as well wait until you have more money in the account. Don't think you can do this with like a $500 account. You're just fooling yourself. Trust me, you're fooling yourself. You need at least a couple of $1,000s, at least. And even with that, you're looking at a very modest gain. A reasonable monthly gain is like 5%. That's like really good, actually. If you could do 5% every month, that's really good. And you say, oh, I could do that in one day. Right. But you can't do that consistently. I'd like to see if you can, but trust me, you can't. So now look at this. The stop is now at break even. This is a risk-free trade. So I went from my original risk, which was 143 points, was my original risk, to basically zero. And look where I am. I should have locked in some profit. The trailing stop is still keeping me in this thing. And I am right now, theoretically, I'm up 300 points. Not bad. If I locked it in right now, if I got out right now. So at this point, you have choices. You could say, I'll let it run and let the trailing stop take me out, or just get out. You can do that. Or if you had three contracts, you sold one, sell another one now, try to hold on to a runner. The runners are really that's really what puts you ahead. Could be a runner. We don't, again, this is now the random nature of the market is now in play. You don't know if it's going to turn here. You don't know if it's going to run up to here. It's up to the market at this point. Make sense? Okay, any questions? Again, go to the link in the description. Sign up for the 14-day free trial. Please allow an hour or so to receive your invite on TradingView. And please listen to what I said. Know your levels. This was a super aggressive trade, but it happened to work out. When they work out, it's beautiful. But there's plenty. Like I tried up here, and it went straight to the stop up here. Remember that? Went straight to the stop. It went lower. Now, when we go back to our 1 hour, let me just show you something real quick. With a situation like this, that's a decent bounce. Remember before what I was saying? We could get support sooner, but it has to establish itself. There it is. So it's going to be hard to capture it the first time. But if we test this level a second time, you now have a point of reference. This can now be a minor support level that may hold when it's tested again. That could be another trade opportunity right there. That's how you use this. So we had this one beautiful trade, and maybe it goes back there and generates another signal somewhere in this area, and you're prepared for it somewhere in this area. That would be a nice double bottom. Make sense? Make sense, you guys? If I turn, now look, I was in counter trend mode. If I turn that off, the trade vanishes because that was counter trend mode. I was in that looking for the counter trend move. So you have to understand, you have to get used to switching between modes, and you have to have the reason to do it. You don't just do it randomly. Cool. All right, you guys. So I don't see any questions. So I'll leave you guys with this. Again, check the links in the description. If you'd like to leave a tip, that would be nice. Stian would appreciate that. I don't get those. That's for Stian. Like I said before, it helps him support the community. Try this thing out for 14 days. If you have any questions, feel free to send me a message. You could send me a message on TradingView as well. You could send me a message in the community. You could send me an email. I'll be happy to answer. Give this thing a try, but please do it intelligently. Don't think that this is magic money, because it's not. No system out there that's available at the retail level can promise you a 90+% win rate. So don't be fooled either. They play on your emotions and it works. I don't do that. I deliver reality. So when you're in control, I just want to sum this up real quick. And when you're using TradeScanner Pro, you're still making the decisions. The TradeScanner gives you the framework. You still have to press the buttons. When you do, the win rate is yours. When you have an algo working for you, meaning you have no control, your money's in some kind of account and a robot trades your money, then the win rate matters. But when you're in this situation, it's all about reward risk. You have to win more than what you lose. And that is how you come out ahead. The formula is very simple. What makes it complicated is us. You overcomplicate it. Less is more. Look at things like support, resistance, look at trend. Those are really the only two main components you really should focus on. And with that, you will have more perspective and better information than most of the other people, especially the fake gurus that are telling you all kinds of nonsense. You will know more than them because most of these people don't know anything. They just pretend. Fake it till you make it nonsense. And they're just trying to push something on you. They're trying to capitalize on your attention. All right, I'll leave you with that. Okay, guys. So thank you again very much for watching. You know where to find me. And one thing I want to mention too, real quick, is if you get a message from me first, then it's probably not me. It's an imposter. It's a fake me. And usually the fake me asks you for money right up front. I don't do that. Just so you know, I usually don't contact you first, and I don't ask you for money after I contact you. So if you get a message like that, simply report the person, block them, report them, and don't give them any money. Please don't be naive. I'm trying to warn you. All right, cool. Everyone, okay, cool. So thank you for watching. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And again, thank you for watching.